Good evening, everybody, and welcome to Live Market Analysis for Monday, 5th of February. It is a pleasure to be chatting markets with you this evening. A couple of public service announcements. I know that I gave you a bit of a bum steer last week in the email, didn't I, where I said, reply to this email with your TradingView username, and I'll obviously add you to my trend ribbons. So if you didn't catch last week's recording, I have the ability, thanks to the good people listening out there who bought me a coffee, I've upgraded the TradingView subscription and to the highest one, and I now have the ability to share with you my trading ribbons. And I did say, look, send me an email. Of course, you couldn't reply to that email, could you? I sent it from webinars at Live Market Analysis. I'm still getting the hang of this whole Google Workspace thing, and I hadn't turned the email function on there. I still don't think I've turned it on, by the way. But you could always get me on carl@livemarketanalysis.com. Very simple. My first name at livemarketanalysis.com, which about 50 or 60 of you did. You figured it out. You sent it to me. A bunch of you pinged me on Twitter. That's always a way to do it. I see those pretty quickly, because as you know, I'm watching my Twitter quite regularly during the day. I don't mind any which way it's better for you to get in touch with me. You can do that. So if you haven't sent me your TradingView username, just send it to me, and it takes me a couple of minutes to add it on there. I might not do it straight away. I'd usually do a sweep every day at the end of the day. Okay, thanks for your feedback and your well wishes. It seems to be working for those who are on it, and everybody seems to be pretty happy with it. So that is good news for us. On the Buy Me a Coffee, I think I've got enough to cover, certainly cover the TradingView and the US subscription. So let's just put a pause on that. I appreciate everybody who's contributed to that, but we're probably okay for the next 12 months, and we'll revisit that in the near future. My only goal there is to raise strictly enough to cover the costs of providing these for you, and the webinar software, which does cost a few $100. That is the public service announcements for today. Let me read you the disclaimer before I forget, which just says that everything we're going to chat about today is general in nature. That means it has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this very general advice, you should consider it carefully and consider it against your own personal objectives and needs, and also consult the help of a financial professional if you think that is appropriate to determine the appropriateness of that advice or general advice or information. You know where I'm coming from. I'm preaching to the converted. You can only be here if you've accepted the T's and C's anyway. But ultimately, it is you and not me who's responsible for the stuff you do. I have to say that stuff, obviously, because I do take great risk when I come and talk to you every Monday night. The risk is somebody decides that the stuff I teach you hasn't been appropriate for them, and they go and complain about it. So I do this with all the best interests in the world, and hopefully you are taking it in that way. Now, that gets us to the fun bit, which is find the chat window in your Google Meet software and get those questions rolling. I'll discuss any chart you're interested in. It could be foreign exchange, it could be crypto, it could be an index, it could be US stock, it could be an Aussie stock. Really, any chart you can that's interesting you, that you're saying, oh, Carl, I really want you to explain how this works, or anything about trading. It could be any of the 3 M's we talked about last week, which is the mindset, the money management, and of course the methodology. Let us head over to, while those requests are coming in, let us head over to the AUB broker screen, and I'll do a quick whip around the grounds. And kicking off, just by pure accident, that's the last chart I had on my screen before I started the presentation, is the S&P 500. Reasonable place to start. We can obviously see the stairway to heaven, and it just seems every big black candle we get, as scary as it looks, as long as it's not followed up by another big black candle, as long as it's not followed up by a lower peak. What are we talking about? We're sort of talking about that's a little bit scary, but not that scary. That makes it a bit more scary. That makes it really scary. This makes it completely frightening, doesn't it? That's scary. Definitely scary. That's scary. That's really scary. That's really frightening. Okay? And hey, I didn't have to go back far. If I have to really look for stuff, ladies and gentlemen, you should be very concerned. Press stop or whatever it is and go do something more productive with your time. A couple of scary ones there. Getting more scary. That's the frightening one. And maybe we can do some sessions. Maybe we don't ask questions. We just go, hey, Carl, go back to this state and explain to me how it works from there. Because I think we can learn valuable lessons from looking at past price action because it just keeps repeating itself. It absolutely has to, because people here and even the algorithms, the robots, they are all programmed by people who will behave in the same way over and over and over again. Hunky-dory. I can't see anything in there that is really stressing me out, nor there on the NASDAQ. Obviously, we're heading to a more risk-on environment here. The stocks that are more sensitive to interest rates, and it is all about interest rates. It has been since, obviously, the pandemic, and it certainly is now bouncing off. Look at that, like magic, ladies and gentlemen. Now, we have to remember my trend ribbons aren't there. I know they're on your screens now. I know they're on your TradingView, but they don't exist in space and time. There's no reason for the price to continually respect my ribbons. It just happens. There it is there. Look at that one. Or let me point to it that way. I can't see anything that would tell me that this can't keep going up until I see the stuff I talked about earlier. Let's head over to the Russell, and now we're going to get a little bit less enthusiastic because we're seeing some of those things that do scare us a bit. That's not great. That's horrible. This is not good. This is not good, that's not good, and this is really, really bad. And putting it all together, given that we've got obviously a POS over here, and it is an MPOS as well. It's a major point of supply because we have let me change the colour so we can actually see what's going on. We obviously have I'll just drawing the shape of it, the peaks and troughs, our medium-term uptrend on this side, and then we ended up a little bit down the track having our medium-term downtrend on that side. Okay, so that's what a major point of supply is. It's got this sort of sawtooth pattern heading up on the left and the sawtooth pattern heading down on the right, and then the major point of demand is just the opposite. Where again we obviously know we've got a sawtooth pattern heading down here, and we can see our sawtooth pattern heading back up this side. I know I'm very much stylizing this, but it allows me to copy that and paste that over here, and then change the S to a D. And there we go. All right. So now, this is actually a really, really good case study. So what if we see something that ends up forming like this? Okay. What if we see price action? Now, it hasn't happened yet, but what if we move along that orange line? Let me get rid of some of this stuff here because it's all getting a bit much and a bit confusing. What that will do is it will form this area over here as another major point of supply, and this is how long-term trends change through the price action. And we're going to find that this price action change will occur way before this trend ribbon will give us any indication of what's going on. And I'm very happy with my trend ribbons now, and they're very, very useful most of the time. Where they're not useful is where trends change quickly, and that's where the price action is the most important thing. We've had discussions, I know Rebecca, you and I have been chatting on Twitter about a particular case study which we're going to look at tonight, Star Entertainment Group, and I asked you, actually put out a bit of a quiz to you all who follow me on Twitter, and I said, hey guys, what do you think about this, and it was a little bit cheeky because it was actually, I think I put it out on Tuesday, because last week on Monday we talked about this idea of this aggressive setup, which I really want to start to really bring into these sessions more. I didn't do it with Think Markets because they went out to the world, they went out to everybody. Every Tom, Dick, Harry, Jane and Jessica could tune in, and I didn't trust them to use that information in a responsible way. As I said, you guys are all the converted. You've all accepted the terms and conditions. You all know that, hey, if something goes wrong, it's your fault, not mine. But I'm more comfortable in sort of bringing in some of these more aggressive strategies. The price action moves first. That's the message. The ribbons, as good as they are, they will be very much delayed. So if we start to see this sort of pattern forming where we get those lower major points of supply, and hey, lower points of supply are important, but what about lower major points of supply? What is that telling us about how the demand-supply dynamics are changing in the market, about how fund managers are behaving? Are they still accumulating, or are they starting to distribute the stocks in their portfolio? We're not there yet, okay? But clearly something is different in the Russell chart compared to the NASDAQ and S&P 500, and we cannot ignore this because, as I've told you many times, this is the heart of corporate America. I get plenty of complaints because I forget to check out the XJO in these sessions. So let's go there now so I don't forget this time. And I'm going to go back to the normal Zoom here. And I don't know if you read my market index evening wrap. I'm sure you're all reading my evening wraps now, market index. And I talked about the pattern here. So the last three candles and what this pattern is. And it's actually quite a rare candlestick pattern, these last three. Did anybody catch what that was. I'm just going to read your comments so I haven't missed anything important. We're on the right screen and everything. Perry's still sending me a link, and it's coming. And if it's Chinese stocks plunge, we're all on that one. Let me click on that separately. Okay, and I'll bring that onto the screen a little bit later on. Hi, Carl. Okay, yes. Trump suggests he would consider a tariff. I'm just going to get to anything important. They're all important. No, ice cream sandwich. Peter's got it. There we go. Jackie's got it. The ice cream sandwich. Max has got it as well. So what the ice cream sandwich is, we all know, it's like a classic, I don't know if it's just Australian, but feels that way, Australian summer treat. We've got the two ice cream wafers here, or the two wafers on either side of the ice cream that's in the middle. And typically, they're two black candles on either side. And it's a bearish pattern, and it's often coincident with the market top, and they're quite rare. So we've actually got, I don't know what you call this, it's almost becoming a double-decker ice cream sandwich with the ice cream over here as well. But we're getting some volatility. Volatilities are consistent with market tops. Not saying anything more than that, but just be on your toes. I don't think there's anything we need to really do about this just yet. But if we start to see black candles, lower peaks and troughs, then we'll be a bit more concerned about that. But otherwise, I'm happy with those trends. That's the message there. And at the end of the day, our scans are more important. I think our scans are more important than the index, okay? Because our scans are going to that's where our setups come from, unless we're trading the index, and they will automatically transition as the market's changing. You'll get fewer longs coming up in your long scan, and you'll get more shorts. Okay, so that's what I'd be more focused on. I'm still happy to take good setups in Australia. I didn't do my scan today. I'm happy if I get enough votes, and maybe we can do that scan towards the end, and I'll actually go through every stock in the scan and tell you what I think about it, and narrow it down and tell you how I would create a shortlist. I didn't do a shortlist today for Twitter. There's a bunch of thumbs up, so we can do that. But let me try and rush through your requests first. I'm going to cut short this whipper in the grounds. I think we've done enough there. I will only show you one more chart because it's absolutely important, and we will go back to here. It's not the chart of the Chinese stock market, which I thought was a horrific move today. Don't get me wrong, but relatively par for the course. But I do want to get Perry's link here, which actually come from Max, and Perry's one might be in that list as well, but I just haven't seen it yet. So let's go here, paste that in, and let's see what we get. And this is CNN Business, so that's certainly a credible. Angry Chinese take to US Embassy's social media account to vent about plunging stock market. Okay, I'm skimming. I'm not sure how valid this is, honestly. So let's just take that with a pinch of salt for now. But this chart speaks for itself. It's bloody awful. What impact is that having on us? It's not having a huge impact so far, but this has been crashing for a long time, and we just made record highs. I mean, that's the most obvious thing. Getting to some of the property indices, they still look rubbish. This is the A-share property indices, so we can see the key A-shares. This is telling you how people in China feel, and they're feeling pretty awful about their property sector. And I just wanted to show you the chart of US 10s. Of course, we can't do one of these sessions without showing you a chart of interest rates. They are the most important market on the planet. They set the value of every other market. And we saw a 14 basis point rally. It's kicked on a little bit in early trading this morning, New York time, and we're nudging probably close to 20 basis points here off the back of that monster US non-farm payrolls print on Friday night, which came in 350,000 jobs created in the month of January, compared to expectations of about half that. And then November got revised up from 216 up to 330. So that is a really strong piece of data, and really does bolster this case I have, or my case anyway, that the Fed is in no hurry to do anything, and these silly market expectations that they're going to be cutting rates in May or something stupid. Let me call them stupid like that. It's just not going to happen. But anyway, what do I know? Just go to the Fed probabilities there. We can see what's the market thinking. There you go. If you follow my tweets, this was 100% not that long ago. Remember, and now we're down to 64%. So the market's, as clever as this market is, it's changing its mind. And these were all 100%, and now they're starting to come down. Well, lo and behold. Okay, let us head over to your requests. And if I can figure out where I'm going, there we go. We will kick off with the ones that have come in offline. And I totally understand this is at the most inappropriate time for many people, Eastern Standard Time. It's the only time, it's the earliest I can do them over here, I assure you. I have a bunch of family things that I have to attend to. Let us go to here and get to James's CU6. And that is a really nice chart, isn't it? I'm sure I've tweeted the hell out of this. I am over here, so let's stay here and let's go to here. And I want to show you the perfect candles. I think that's a really nice candle coming off the long-term trend zone. And it's a little bit of an aggressive one within the context of the short-term trend. I don't think it's that aggressive compared to the stuff we've talked about. But that is certainly looking amazing. That candle there, for me, is a compulsory buy. That candle there is a no-brainer. And go back and check my tweets on those days. I bet you I put them in as a feature chart, and on that day, and on that day, and on that day, they're all feature charts for me. I didn't put it on that day because I didn't like the upper shadow. I definitely put it in on that day. I probably put it on that day. I maybe put it on that day, and I'm saying just a tiny upper shadow there, and that would be it. And that's probably why James has asked about it, because he might have taken it on the basis of that information. I'm a happy holder from here. I don't like some stuff going on. I don't like that. I don't like that. I don't like that. I don't like the fact the price action has started to flatten out. I don't like that, because what that does, in fact, let me draw in my lines first. So let's go here, 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 and here, and up to there. We don't know where that one's going to end. Could end anywhere. But you can see how the price action is flattening out. And if we change the colour, and let's say, what's a good colour to pick? Let's go maybe that colour. And we go price action prior to that. What do you notice about the price action prior to that compared to the more recent price action? I reckon that one is. There. So if we look at how the price action has really started to flatten out, we've gone from predominantly white candles to predominantly black candles, and we've also got this point of supply up here, which is quite prominent. Let's go into here and just go. It's only a minor point of supply because we don't have the zigzag pattern coming down the other way, and that's important too. Okay, so it's not a major point of supply yet. So I think we're on alert. Okay, and we're just watching for signs of excess supply coming in to confirm what is only a suspicion at this stage, that we are seeing a transition into equilibrium. And I'm not talking about excess supply here. I think, and hopefully the light bulb just went off. Oh, okay, I can see we're excess demand. That's all that's happening here. It's very simple. We've just gone from excess demand, an environment of excess demand, and what are we here? We're just equilibrium. It's just become an equilibrium market. Now, where do we go from here? There's nothing stopping the demand side from absorbing the supply that is so clearly in the market here. That's where your supply is. And to be fair, it's we could call it excess supply at this stage. We absorb that, and then it's a great stock. It's going to $3 or $4 or who knows, who cares? But we get rid of that supply and off we go. I might just get, because there is some noise coming through and it is probably a bit distracting for some others. So if you are not on mute, can you just double check and make sure you are on mute, whoever that might be. And let's see if maybe that fixed the problem. It might have. Or we could get the other alternative, and we will know what it is when we see it. Let's change the colour again, because I love the fact I've gone from light green to orange. Isn't that clever for me? What if we see this? Okay, in terms of price action, and that's going to happen so much faster than that changing, and certainly light years ahead of that changing. We would then be moving into an environment of excess supply. And ladies and gentlemen, that is as simple as markets. That's the wrong way. That is as complicated as markets should be right there. I'm a happy holder. You know what will change that thesis for you, James. Rebecca has, good, SGR. Let's go to that case study now. And again, a little bit cheeky. I said, what do you think of this? And it was on this candle here. And pretty average day the next day, but seems to be going higher. But I look at that and I say, I think it's worth a nibble, and that's all we're talking about here. And people kept banging on about how the trend ribbons are not pointing the right direction, and that's my fault because I've taught you quite well, I think, in regards to always follow the trend. And the trend ribbons are certainly an important way of identifying that trend. Okay. I'm not telling you to ignore the trend ribbons. They are important. But as I also say, price action is going to change much faster. And if we actually look at that day, that for me, when I look at that chart and I say, that's a day I want to just put a little bit of risk on this stock. You can see that the short-term trend hadn't even changed yet. And this is the nature of an aggressive setup. And I go into an aggressive setup knowing that I might lose my money the next day. I don't go into it thinking I'm probably going to lose my money, because if I think I'm probably going to lose my money, then I shouldn't do it. There was it was A2 Milk. Go back and check the tape. A couple of weeks ago, two or 3 weeks ago, A2M. It might have been here. And I said to you, this is really difficult for me because we hadn't really done as much work on the aggressive setup. And I said, I think this is going up, but you can't really buy it yet. I think I said I needed to see a little bit of interaction in this zone, and that's a really good example. I look at this one. This SGR is the same way. There we go. I think it's going up, but if you were trading on trend ribbons, you wouldn't buy it yet. But that doesn't mean that we can't take a nibble. So if I normally, for example, purely hypothetically speaking, normally put in $1,000 per trade. All right, so that's you. I might put literally $100 worth of risk on this trade, or $250 worth of risk on this trade. So ordinarily we'd move in thirds. So in that case, I might go a quarter or 20%, or whatever you can sleep at night with, knowing that I've just taken an aggressive setup, but I've only got that much on it. And then we will add to it as required. If we never get another bullish candle, this is all we've risked on it. So what? But on each bullish candle we can add just a little bit more, so that by the time we eventually start to turn all this other stuff around, we might actually even have a full risk position on this by then. Okay, by the time it's a valid setup, and well, we'd probably be taking a third at that stage ordinarily, but it's done all the right things. If it never does the right thing, then we don't take it. But it at least needs to have higher peaks and higher troughs. Okay, so here are some rules, and we should have a predominance of white candles through the higher peaks and higher troughs. Preferably, it's closed above a point of supply here. We've certainly got one there. Preferably, also, really important, it's actually started to put in a significant basing pattern after its ridiculous decline. And that's important as well. And I think the other part of it as well is we're actually starting to see some volume come in. And certainly, really there's quite a marked difference in volume through here to where it started to do that basing pattern. And that's really important for me. So we're starting to see some funds really fish for the low here. And they don't always get it right. There's value, there's value. And the bad news is still coming out, right? Oh, I'm looking past the valley. I'm seeing the value and I'm looking past the valley, but their timing isn't perfect and there's still bad news coming out of the stock, so that weak hands are still selling. But you can see that selling is hitting something now. And this is one of the crucial things I'm going to tell you today. And some of you have probably heard this before and you know it. But you often hear, okay, the worst thing you can do is have a stock falling on big volume. That's bad. And that's bad in certain circumstances, particularly when you're breaking through key points of supply, points of demand. But the worst thing you can have is a stock that falls. This is actually the worst thing you can have, is a stock that falls on no volume. Okay? That is the worst thing you can have. The stock which is falling on no volume has supply. Well, how do I know there's supply? Well, it's falling every day. I've got black candles. The computers are programmed. Ladies and gentlemen, this is not somebody sitting on the button pressing sell. Computers are programmed to exit this stock because the algorithm says, the valuation algorithm says we need to be out. This stock is worth much less than what the current price is. And we've got this many shares, so we need to get out as soon as possible, as much as the market can absorb. So we don't sell it all on the same day that we've made that decision. We know we need to get out, but it might take us 6 months to sell all the stock so as we don't dump the price too much. And instead of having one operator pressing sell every day, that order is put into an algorithm, and the algorithm waits until demand comes back into the market, and it hits that demand. And then it waits for some more to come back in, and it hits it. And that is what's causing these black candles. So I don't just say, well, black candles are bearish for no reason. Black candles are bearish because they signify these programmed orders that are just pervasively supplying to the market. And when that supply is pushing price down on little to no volume, what does it tell you about the demand side? What is it telling you about the supply side's ability to find what they need, which is cash? They want cash, they want out. They need that money to come in. And of course, if it's a crap stock, there's very little cash that wants to be in it. It's just mums and dads going, oh, Star Entertainment used to be $8. Now it's $2. It's cheap. I'm going to buy some. Oh, now it's $1. I better buy more. Somebody told me to dollar cost average. The worst thing you can have is a stock that's falling on no volume. But when the volume starts to come in, what does it tell you about demand? Now, demand might not be getting it right. I know I'm labouring this point, but you need to understand it. Demand might not be getting it exactly right, but at least demand has come into the system. So I'm trying to give you now a framework for understanding when these aggressive setups might occur. And it's not just Carl giving you a green light to just take any old thing that's crashed. For example, let's have a look at this as a particular case study, right? And this looks horrific, by the way. A little bit of volume here, to be honest. I mean, it went thunk, and it did actually find some bargain hunters. Why did it find some bargain hunters? I reckon $1. I actually think $1's got something to do with it. It's just a round number. Liontown can't go below $1. Right, $1's cheap. But we can see that's fading very quickly. But we can see also that the volume is very, very thin through here, through much of this fall. And then that's probably more to do with this big shock. So, yeah, it's probably not a great case study for me to make, it's falling on low volume. It's not. There's a little bit of volume there. But anyway, it is a case study for one where we're not looking at that and going, oh, Carl said I could do aggressive stuff now. All right, that's not it. All right, I think I made my point on that one. Let us keep moving. I won't spend as long on all of them, don't worry. It's just on the ones I think there's some value for us. Okay. I think we talked about this last week. Is this an aggressive setup? What did I say? Remind me what I said. I think I might have, I can't remember. Anyway, let's pretend I said nothing on it. And I don't mind it, actually. I don't mind it. Look, there's our volume. That's good. We've seen less through here. That's okay too, because it's going up. It's not finding as much supply anymore. I think that's okay. The price action could be better, couldn't it? I mean, really squinting here, I don't think I can see the higher peaks and higher troughs through here, and I'll draw them in for you. So if I start here, which is the obvious trough, I go up here, and that's an outside day. So we don't have lower highs and lower lows to make that a peak. So I'll just skip past it. Yeah, I'll just explain. Higher high, higher low. Okay, so we've got a short-term uptrend. Check. Higher high, lower low. Ignore it. Don't count it. It hasn't changed the trend. Higher high, higher low. Okay, good. Still in a short-term uptrend. Higher high, lower low, hasn't changed the trend. Just disregard it. It's an inside day. Just disregard those. Forget they even exist. Still going up, high. That's an inside day. Forget they exist. You can't forget all outside days, by the way. Because if you've got an outside day that closes beneath the trough, I would argue that's changed your short-term trend. Let me say that again. If you've got an outside day that closes beneath the last trough, I would say your short-term trend has changed. Have we had a lower high and a lower low? No, because we've got an outside day. The high is higher. Okay, but if you close beneath the trough, that is a key point of demand. It's impossible now, I think, to argue that the short-term trend hasn't changed. So you can't ignore outside days, but you can ignore inside days. They're inconsequential. Okay, so we go up here, and then we do come down here. So this is the only price action I have. Ooh, I reckon I've got that as well. So I've actually got lower peaks and lower troughs. So I'm not seeing the price action that I want here, although the candles are pretty good. I could get interested if we saw a nice white candle close up there for an aggressive setup. But even then, we're starting to get close now to the resistance, the dynamic resistance we should expect, right, from that invisible long-term trend ribbon, but ignore it at your own will. And if we go back to SGR to compare and contrast, because I think this is a good idea to kind of say, well, Carl's introduced something new, aggressive setup. Well, how do we differentiate between them? But look at the distance you've got before this barrier up here. So you've got miles and miles on that one, whereas maybe Woodside hasn't got as much. So if I had to pick between the two, I'm probably going for SGR, maybe not for Woodside. But don't get me wrong, that doesn't preclude you from having a crack at this. My system is carte blanche. You can do whatever you want. You always can, right? But if you're going to do something stupid, do it on a small amount of money. And that is probably the thing that's new, okay? You can do whatever you want. If you've got a great trend, put more money on it to start off with. As it gets better, put more money on it again. If you've got a really crap trend, because it's only just started, put a little bit on it. And if it goes well, put some more on it. Put a little bit more on it. If it doesn't go well, you're not putting any more on it. Do you see how this kind of sets you free? You can pretty much do anything you want if you get the what part of it right. And that's the key. That's the bit that took me decades to figure out, ladies and gentlemen. I might not look old, but I swear to you, there's an old person within this body. You get old in the market very quickly. I started doing this when I was 16 years old. Now, let us go to the next one. Let us go to Duratech, DUR. This is where I always say, I'm going to pick up the pace. I promise I will. I think it's fine, isn't it? Would I buy it today? Look, again, it's not the most obvious one, but I can see reason to throw a bit of money on this on the basis of it is bouncing off the long-term trend ribbon, which is pretty good at facilitating nice bounces. Okay, we've got some nice white candles. We've got a little bit of volume there, pushing it back up to remove some of the supply. And if we can remove supply on bounce, we are then happy to see that volume diminish now. And this is where we start to see how price action and volume works together, okay, to create lows. A little bit of a push on the bounce and then see it diminish. And the reason why we want to see it diminish is we want to see the opposite of what we spoke about before. We want to see the program buy orders coming in now. We want to buy, but we're not finding that volume to meet our requirements. And then we're having to chase that higher. And that low volume is an indication of that lack of supply. So should that continue, so the volume just meander off here and white candles continue here, hunky-dory. This is an important point of supply. I'm going to put to you this is a major point of supply as well, and therefore we should take it seriously. The other benefit of throwing a little bit at this right now is that we have a reasonable risk reward until we get to there. If we were to wait one or two more white candles, it would change that dynamic. We wouldn't have that reward to risk working for us in this trade because our logical point to place a stop loss is somewhere under here, right? So what we've got now is the ability for a very sensible place to put a stop loss, get in with reasonable reward, one-to-one reward to risk to our major point of supply, and then we can see how we go there. We might sail straight past it. We might put in the most horrific top, and then at least we've got a little bit of profit, or we can trail our stop to break even by then to facilitate an exit that is at break even or better. Okay, but if we don't have that, then we won't be able to do that. If we don't have that minimum risk reward, we won't be able to do that. That is if we get in a little bit later. So happy with that one. Do we need to sell it? No, we don't need to sell it as far as I'm concerned. What would make us want to sell it? You know the stuff that would make us want to sell it. So I won't go into that in any more detail. LAU is the second one from Brendan. And this one has gone into a little bit of a coma, hasn't it? It was one of the best stocks, if you remember. It was all over my Twitter shortlist through here, Lindsay Australia. And look, I think it has the ability to re-establish its long-term uptrend. But it's a little bit boring for me. Is it an aggressive throw a little bit at it? Bit of supply removal today, a little bit of volume to get it going. I'm not completely averse to it. I'm just not sure this would be the best one we're going to see today. Okay, so a happy holder if I had it. Where would that thesis change? Certainly beneath there. You are compelled under my system to manage your risk. Okay, and then if you've got a full position, you might give it a little bit more room, but even then I don't think you need to. I think once we're starting to move beneath that long-term trend ribbon again, it's starting to feel like it's had its chance and it's not really able to do it. Let us go to Boss Energy for Craig. I know this is a popular one. It is still a picture of demand for me. Pretty crappy day on the market today. Remember the ice cream sandwich. And this is still a picture of strength. Even today's candle with its long lower shadow pointing down is still telling me that there's plenty of demand in the system because that's the only way you can get a lower shadow is if it comes down. And why did it come down today? I don't know, because every other bloody thing was down. And then the programmed buy orders, they come back in, don't they? They're just sitting there absorbing the supply, the motivated supply, the supply that is not there because it's programmed. And again, remember those programmed orders they're long-term buyers. They're trading on value. They've got to sell off because a bunch of hot hands took their profit, and it was that long-term money, or those algorithms that came in and bought it back up by the close. I can't see any reason why you would sell this. There's just nothing in there to suggest any sign of excess supply. And if I didn't have it, I'd be happy to add even here. But understanding, it's had a bit of a run, hasn't it? But still wanting to have some skin in the game if I didn't. And that's the message. I can't, mate. I can't buy it. I know. I watched you short. I know you bloody shortlist. I know, mate. But I tell you, Carl, if you put 10 stocks in the shortlist, mate, you're averaging probably about 7 out of 10 right, mate. I get the 3 wrong ones, buddy. I'm not kidding you. Every time I pick, mate, it's a disaster, and I can see all the other ones going. I'm bashing my head against the brick wall, thinking, why didn't I take those other ones? You have to get out of that mentality. The idea that I can't buy this because it's too high. I think we need to dispense with that. If you're here listening to me, that should not be part of your mindset any longer. So it's just a matter of, and maybe that's part of the reason why you're somehow finding those ones that aren't doing as well, because maybe you're trying to buy the ones that aren't extended into the top right. I'm trying to, it might be a style issue, and your answer might be in the exact thing you're doing when you think about it. Let us, I think I've said enough about that one. Let us go to, I've done that. Okay, I'm going to go to people in session today. Austria, Anton is in Austria. I think that's amazing. I don't know if you're holidaying there or working there, Anton, or you're a native. That's the most curious thing to me, if you're a native trading Aussie shares from Austria. I think that's wonderful. Who's saying that there's a Trump tariff, or talk of a Trump tariff, because he's not in power yet, so he can't actually do anything. But I'm guessing maybe there's a fear that is going to come, and that's caused the Chinese stock market to crash. And it would certainly explain why our market was so rubbish today, even though I couldn't actually find any direct headlines leading to that conclusion. So I appreciate your input there, boys and girls. Can I look at NTI? Asked Terry. Absolutely, Terry. Of course I can. I like that. A picture of demand. Let me have a look at the weekly chart. Nothing too sinister there. Let me draw a red box here, so that when I go back to my daily chart, if it's there, I'll be able to see it. And certainly if I, do that, it's miles away. Nothing to worry about. I don't think there's anything to worry about here at all. We had a terrible day in the market, and it had really a nothing candle there, so that's fine. Price action's good, candles are good. I can't see any reason why you wouldn't hold on to this one. Would I buy it today? I need a better candle than that to get my money, but otherwise I'm pretty happy, a happy holder there. Let's go to who's providing some more information. Trump suggests he would consider a tariff upward of 60% on all Chinese imports if re-elected. What a dickhead. Hi Carl, your thoughts on US stocks? Let's go to US. Let me do the ASX ones. Dark technology. Yeah, again, been all over my Twitter shortlist. I reckon. Correct me if I'm wrong, but that would have been the last time I put it in. Stairway to Heaven. Picture of demand. If I was a particular value investor that I'd listen to sometimes or watch on TV. And this particular value investor says, I had that one. We thought it was really good, but then we sold it and we never bought back in, and now it's like 10 times the price. Don't be that person. Don't sell it because it's gone up. I think that's fine. MVF is also going very well, and I must admit this is one that it comes up in my scans every day, and I never put it in because look at the price. It's so overlapping, and I finally gave in. And as maybe that's why the person's asking, I think I put it on that day there, and I couldn't ignore it anymore. Regis is another one that you might see. Sometimes you'll see stuff and you go, why doesn't Carl put that in? It looks really good. And it's just sometimes just Carl has some emotional baggage potentially to some stocks as well, but also just the knowledge that I might have traded a stock when it looked really good. And I know I'm sure I've traded it as well. what was the other stupid one? MVF. There we go. And it's just frustrated the hell out of me for probably weeks and months. But there you go. The fact that I put that in tells you that it is finally starting to behave like a normal stock. Picture of demand, no complaints there. Let us go to ATP, which is Atlas Pearls, beautiful. I have no more words for that one. And we are all going to be a broken record pretty soon, aren't we, in this session? Because again, I'm preaching to converted. I don't need to do a lot of education on that regard. You know what I think about that one. But that doesn't mean you shouldn't ask about it, even if only to feel good when Carl says something really nice about the stock you already own. I think I'm happy to provide you with that service as well. Let me do AUB. This is a little bit more challenging, isn't it? I mean, the last chart, easy, takes 10 seconds. This one's a little bit more challenging. It's got a little bit of work to do through here, and I think it's fine. And I think we're just seeing a little bit of the influence of this major point of supply, and it is a major point of supply up here. And we know that there's a bit of, we talked about emotional baggage and emotional baggage, really, of the people who bought in around here, because it looked great up here, even for trend followers. And then by here, they're feeling a bit awful, and they're feeling a bit lousy, and they're feeling a bit despondent. And they want to undo some mistakes, and that means getting out sort of close to break even around here. I think we're seeing some supply there. The key candles you want to look for, that's the key candle. And I think as long as we continue to trade above the low of that candle, this is all vibration stuff to do with the major point of supply. So happy holder. Certainly if we start to close beneath that candle, then I think we are starting to manage our risk. And then we're just waiting for the next white candle for the long. I don't even need to see it break that point of supply because it's doing the work here. So I think, again, you'll often hear, textbook technical analysis, right? How has that worked for you? Now, the key to breakouts is not waiting for the breakout, okay? So but we're not just buying for any reason. We're looking for the nice white candle that gets close enough to it. And that's telling us that the supply there really isn't a problem. If it was a problem, you couldn't get that candle. And what we're allowing ourselves to do, and it took me, again, a long time to realise this, is we are in before the technical traders come in and buy their breakout. And that, I think, gives us a tremendous advantage. So really, we're just looking for that kind of candle. Next white candle, close to that point of supply, does the job for me. Let us keep going here. IRE, which is under a takeover. So if you're wondering, maybe, the trends are changing, or it looks like a turnaround setup, which it does. Ordinarily, that's a turnaround setup. A big rally through here with very little pushback. That's the sort of stuff we like. A big consolidation pattern, volume sort of dying off, and then the next big breakout in volume, and we're off. Okay, won't happen. There's a takeover here. I don't know the details of the takeover. Maybe there's a high bid coming. I don't know, and I don't care. Takeovers for me, a bit of a moot point. I think you take your money and then go do something more interesting with it, unless you think there's just this most incredible chance of getting a high bid. But I don't know enough about it to comment on it, so I'm going to keep moving because I can't really do technical analysis on it if you kind of get my drift. DRO. Last week I said to you that I said it was going up. I said, it's got all the hallmarks of excess demand, but I said it's going to do it excruciatingly slowly. I used words to the effect of death of 1,000 cuts, but sort of in a good way, and I was wrong in regards to how quickly it was going to go up. But I doubt any of you would have sold based upon my comments last week, so that's a good thing as well. Do I think we need to sell here? No, I don't. But you know what to look for: low peaks, black candles, and that sort of stuff to start to take some profit off the table here. And I think that's probably your next step, unless you keep pretty white candles. But until you see that, there's nothing you need to do, and that would be at odds with most. Think about how many times. I don't know if you've listened to other commentators, and when they get one right, and then they take your profits, right? Right, because they just want to lock in a winner. It's not me, mate. If that's still going up, then why would you sell it? Let's keep going. I'm just picking out the Aussie ones, and I'll come back to all your US ones. Playside, look, interesting candle today. Could have been a lot worse, couldn't it? And the fact that the demand came back in, I think, is very reassuring. I think I'm still holding this one. I don't think you need to do much about it. This candle here is is disturbing, don't get me wrong, but this candle didn't back it up for me. And if I had this candle and a backup today, I'm managing my risk. Don't ask questions. And when I say manage my risk, I'm not getting out of the whole lot. I'm just taking some off the table as a precaution, and then I'm still looking to get some in if I see another white candle. I don't think we need to, but I'm on notice. I'm certainly watching this one very closely, and anything that resembles a full black candle is probably going to get some of it out and then happy hold on the rest of it. Would I buy it here? No, I wouldn't buy it here because, look, you've got a big shadow and a black candle. Let's go to ice cream sandwiches, 2 black crows. I'm getting towards the bottom of the Aussie ones. C is for China. Yes, I know. You guys are talking amongst yourself. That is fine. Rock on Carl, says David. Double top or triple top high alert. I'm not sure which one that was for. David's talking about wave cycles. I love wave cycles. David, do chuckle at those. WTC, let's do this one for Haraju. This is a really nice, it's growing, a growingly nice looking chart, an increasingly nice looking chart. Hey, what do you think? I mean, do you think that last candle warrants an entry? I'm pretty sure I shortlisted this on this day, on this candle here. So anytime you see a shortlist, that's me, see it in my shortlist, that's me telling you, hey, I'd go plus 1/3, right? We do one webinar a week, but I'm trying to be there for you with my shortlist as well. If you see it in the shortlist, it's plus 1/3. If it's a feature chart, I liked it more than the other ones, okay? So that is a nibble. I'm still not doing aggressive setups in those shortlists, and I told you why. That's a nibble there. I wouldn't nibble on it today, but I'm not far off it. Next white candle. Hey, having said that, this here, what happened to us here? We've all got short memories. What happened to us right there? This is a stock that we were all over, and I think it was still Think Markets webinars time, and we were just, every week we covered it. It was plus 1/3, and of course we had an earnings update, and boom, right? So it's trying to build back up, and I'm only making this point because we are obviously heading back towards earnings, and I did create for you a really good earnings calendar. So head to market index, that's my market wrap. I wrote an article about nickel stocks, and my calendar is somewhere, just find it and then bookmark it. Not that one, not that one. There it is there, that one there. So just find that one, ASX reporting calendar to rule them all, and you can keep track of when your company is going to be reporting. And I'm inevitably probably going to get the question, okay, should I manage my risk before the announcement? And this is the $1 million question. We talked about this last reporting season. I don't mind it. I don't mind just taking a little bit off the table, especially if you had a really good run on something, and not getting out all of it, but just taking a little bit off the table before that earnings report. Because I think, I know, and again I said, we have short memories, don't we? But I'm pretty sure our last earnings season together was a doozy, as in there were some pretty nasty surprises that came out. And there's nothing you can do. There's nothing you can do. It's not a fault of the system or a fault of the market. It just happens 2 times a year. Just be glad it doesn't happen 4 times a year like it does in America, where they report quarterly. So I think that's fine. I'm a happy holder. Check the calendar. Let us do BOC. Okay, Bougainville Copper. Maybe that's the one you want. I know it's been asked by Robert with a couple of other Aussie stocks. I can't see any reason to sell it. I mean, today's candle's not great, but it's not bearish enough to trigger and manage your risk. Would I buy it here? No, I can't buy that. It's just, it's too far away from my light green zone. Order of magnitude of double the price away from my light green zone. So I could start to look at it. I don't mind, but it's not one I'd be rushing into right now. I do note it has a bit of a habit of doing stuff like that in the past. I'm sure there's excitement around it, but I'm going to just pass on that one and try and find something a little bit more reliable like this one, which looks fantastic. Now, this one hasn't been coming up in my shortlist. You're probably wondering why, and it's just, I'm guessing it's failing on my liquidity filter because I can see complete lack of volume here. But otherwise, the price action is fine, and it's better than fine. In fact, it's very good. The candles are very good, and the trends are very good. I can certainly hold this one if I had it. I'm not buying today because of the black candle, but open to open to doing so on the next setup So no complaints there. Let us keep going. Sorting through your stuff. Iress, I've done. Lots of comments here, chatting amongst yourself, or just really David chatting to himself. David's left us, as you can see. OPT. Let's have a look. Look, is it an aggressive setup? I guess that's what Amber is asking. Does this qualify? I don't mind it. It's not far off. It doesn't have the right price action yet. So remember, for the aggressive setup, we do want to at least see something like this. So higher peaks and high troughs. We want to see full white candles. We've got a few shadows here. So I don't think it's there yet. And it's not quite there on the turnaround play either, although it's not that far away. So it's one of those I think we can keep an eye on. And Amber asked me about it next week and the week after, and we'll go blow by blow until it does give you that opportunity. But for now, it's got my interest, but probably not my money at this stage. We want to look at the silver chart. I think from David, we might get to that a little bit later. Dubber, I think we did do. Oh, Dubber. Okay, Dubber. Oh, okay. Hello there. See, this is one I think you can do. I wish it had a stronger candle. I wish it had a higher close. But look, I'm not trying to make an excuse for it. But if you blended these two candles together, it does make it a longer candle. And it's a very common technique I use. I'm not just bringing it out for this. So, why does 4 o'clock, why does 10 o'clock and 4 o'clock define when demand starts and ends? It doesn't. And this is why this theory of blending candles is valid. Look, I think so. And I think it's a super aggressive setup for obvious reasons. We're actually in the dark ribbon now, the dark pink ribbon. But it would be, nothing more than hurt money that's not going to hurt us. Having a crack at it, okay? And we know it's an aggressive setup, okay? And we're in this for a good time, not a long time. Next big black candle, lower peak, we're out, we're discarding, we're saying it just didn't happen, and we're moving on. Okay, we're not putting the house on Dubber, thinking we've got some sort of bargain here. But that is a really fantastic example of that concept, so thank you for that one. From Michael, let us go to JBH. And we've got some problems here, and obviously it was a wonderful trend, and I ran it probably as a feature chart on this day, which, you could call that, if you wanted to, you could call that a flaw of the system. That on that day, I still think it's a buy. I know it's a long way from the light green zone, and we might be only buying here a very small amount. We might not be putting a third on. We might have a rule that says, look, if it's more than 10% from the light green zone, I'm going to compel myself to buy because that's the mentality I need to be in. But I might be only putting in a sixth or smaller. But I have to get into the habit of buying those things which are exhibiting, which are pictures of demand. We would have had, I think, on this candle here. And this is why I say you can still do that, because the market will give you this and this to tell you that, if I did buy on this day, what am I really risking here? And I think this is the candle that kills it. That's where we're managing a risk. And then we're probably managing, well, certainly on today, we're certainly managing through there. So I think at most on this, if that is a minus 1/3, okay, this is a minus 1/3 on today's candle, so we're acting upon that tomorrow's market, and then the most we've got on this is a plus 1/3, and that might be just because you're a big fan of JB Hi-Fi and you want to keep some in your portfolio, okay? Let us go to fill the gap. Because you've got so many things in the thread there, Dave, I can't follow them all, so apologies for that. Can we look at Bitcoin? Let us do the US stocks, and then I'll come back. So stop asking about Aussie stocks. I just want to sort of be able to chop that off, and we are going to. Oh, thank God I changed that, so I thought I was on the wrong screen there. Okay, so we're going to go to US stocks now. Let us go to. I've gone up to the top of the list, and we're going to go to FTAI for Perry, and I expect it's going to be a good one. So Perry, I think maybe that last thing I said might be most helpful to you, and maybe you've kind of seen it or felt it already, that this idea of how important money management is, And seeing stuff like this, and Perry knows that in the US, this is quite normal for stocks to do this and to continue to just lock candles until they don't. And when they don't, they're probably more likely to do something like this than to crash, right? So they're probably more likely to do something like this, like to go sideways for a period, than just to crash. But it's still not a great time to be in the market. So this idea that if we are, and I'll let you make your own rule, however far away from light green zone, look, we can buy it, but we might buy it with less than a third. And I think that's where I am with this one. No complaints. The thought of selling it has not even entered my mind. Let us do Perry's next one, which is NMYT. Make my trip. I like that name. Oh, that's even better. No complaints at all. And again, I feel compelled to buy something like this because it is just such a picture of excess demand, and I can't see any reason why you wouldn't add some to your portfolio, but doing it in an amount that respects the fact that it is a ways away from a light green zone, and we know the light green zone is a magnet for price, isn't it? Eventually, so happy with that one. ITT is the next one. See, I think this one's a bit more of a coiled spring. I think it's closer to the light green zone than those other two, and I think this one you could go a third on this one. So no complaints there. That's a really, really wonderful chart. TXHR is the next one, and I might have mistyped that. TXRH, I should say. TXRH. There we go. Texas Roadhouse. This is the restaurant chain over there. Ditto. Can I just go ditto for everything that we've seen so far on these US stocks? Again, it's adding some risk. It's just about deciding how much risk you're looking to add. Let me go back to the weekly chart, make sure this and it's blue sky. It gets even better. So once again, Perry has given us a bunch of fantastic stuff. Ingersoll Rand is the final one, and there you go, ditto, plus some risk. And I think this is still actually in the realms of 1/3. I don't think that's so far away from the light green zone. Let us keep going. I'm going to do NVIDIA. Okay, and this one is for Craig, who is tuning in from New Zealand, if I'm not mistaken. And obviously can't make it live because it's some ridiculous hour in the morning there. And again, how good is this? And what I love about what I'm teaching you is you can see here there's no reason to sell it. It would have been so easy to sell this all the way up, wouldn't it? Thinking it's gone up too much. And all the hype and stupidity around, it's just 7 stocks or whatever it is, or there's valuations of this or valuations of that, and all that's stupid talk. It's amazing. I can't see any reason why you wouldn't have some risk on that now. If you didn't have NVIDIA in your portfolio, I can't see why you wouldn't have a couple of shares in to see what happens on it. And what I'm missing a little bit here is my volume. So let me put on my default setup here, default template. And that's that one. Now we've gone back to Woodside because it saves the thing, whatever thing it was, you saved it on, and then we have to go back and find. It's a little bit frustrating. And yeah, it's TradingView is all good. Don't get me wrong, but it's not as I'm not as comfortable with it as I am with the old NVDA Amy broker. There you go. Nothing there to suggest anything, but stick with it. Let us go to BRZE, which is Braze Inc. There's a lot to like here. Hey, is it as good as the ones we've seen up to this point? No, it's not. Why? Because there's supply lurking, lingering, and working in the market around this sort of 57.40 up to about 58.50. And look, I'm fine on next white candle, really close to that major peak, and then I think you can go. But until then, probably just keeping an eye on it. Let me see how it looks here. And see, look, it's not a blue sky either. We've got, this is probably the shadow of 60 that's causing this issue. You can see how it's got it just vibrated between 60 and 50, really. And then we've got a little bit more to worry about up here, not that far away. This is not the best one I've seen today. It's very good. I'm going to give it, say, 6.5, maybe 7 out of 10. It's got my attention, but not my money. I like that phrase. I'm going to keep using that one. And don't, Adonis, don't feel disheartened. I didn't give the one that Carl gushed over. That's not what this is about. It's just about answering your questions, really, isn't it? And learning more about how to get this right. From Likes of Bets, interested in explanation of your 1/3, 2/3, 3/3 terminology. Am I rightly or wrongly assuming full risk is 3 out of 3? No, it's not actually, because look, it is. A full risk position is 3 out of 3, but you can go beyond that. Okay, so you could have 4/3 or 5/3 or 6/3. Typically, you do want to have a limit, and I pretty sure in a trading plan which I have written a long time ago, which I don't really refer to all that often. I'm pretty sure I had four units is my max, and that was taken from the turtles. The turtles would operate on the basis of 4 full units. So in theory, you could go up to 12/3, and that's very powerful when you think about it. When you think about adding to a trend like NVIDIA, think about that for a second. If you were to continue to add a third each time you saw a nice setup. And there were a few there, you would have taken out a third every now and then. But what would you be on? Would you be on 12/3 right now? Possibly so. Where our individual risk is a self-determined constant versus the bank. Yeah, look, some people use a dollar amount. I like to use a percentage amount. 1% I think is a very sensible amount. Some people like 2%. Probably don't want to go too far beyond that. Maybe if you wanted to go 3% because you got 3 ones make a 3 ones make a 3 ones. Well, 3 ones get you up to 3, right? But I wouldn't go any higher than that. Percentage will scale up and scale down with your bank account. Don't forget, you don't want to be using $100 a trade when you're at 10 grand, or you start with 10 grand using $100 a trade, and then you're at 100 grand and you're still using $100 a trade, because that would not be enough for the amount of capital you have. Columbia TriStar Pictures looks like Paramount C is for converted. Not sure what that is. Columbia TriStar Pictures. I need a ticker on that one. 2 Black Crows Maribozu. Shortlist I will get to maybe. I'm just getting, there's lots of chat here. The URL to show the unrest among the Chinese about the stock market. Chinese government won't be happy about that, so it might lead to more volatility. Yes, markets are going to be closed, aren't they? So that may be explaining the kerfuffle. Very good point there, Max. Rebecca, I've done Rebecca's. I've done that one. Looking for US stocks specifically because I've done the Aussie stocks. And if that is it, then we might go. You've got GE here, David. Let's have a look at that. Still very, very good. I'm not a buyer based upon that last candle, but I would have been a buyer based upon the second from last candle, as in adding some risk to it. I can't see any reason why you would sell there. Let's look at XOM, which we talked about this, didn't we, for a potential turnaround setup or an aggressive entry, and we decided against it, I'm pretty sure. And I can't see any reason why we need to change that thesis at this stage. Look, it closed above the long-term trend. Remember, a nice big white candle above 105. I think it would qualify as an aggressive setup, but not until then. Let's do, somebody asked about silver, so let me do that one now before I forget. And we're going to go to, there's gold, there's silver down here. And I think we've got some real problems here, actually. That looks quite awful, actually, and more likely to head down than up, but it is going to be well supported around that 21.30, 21.20 mark. So if you're asking about a short potentially, I can see why you might be thinking that, but I'm not sure you're going to get a whole lot of bang for your buck here. That's all. I mean, ultimately, let's face it, I don't remember when I drew these two lines, probably way back in Think Markets days, but it has somehow pretty much gravitated around those two lines. It is nothing more than a sideways pattern. And that's the gold chart there. That looks pretty sideways to me. I'm not getting anything close to excited about that. We have been watching oil a little bit, and it started to look quite promising, and then not. But there's so many things going on with this. We have, like, why would you want to just bash your head against the brick wall? That is what's going on in the oil market right now. Let's just say there's no trend there, so let's just keep moving on that one. let us go to, I'm not sure if you're asking about Bunnings Warehouse Property Trust. I can't tell, David, on that one. Let's go to Treasures on the ABC now, says David. What's he talking about? His tax cuts, I'm guessing. Manpreet, GTK. Manpreet, that might be an Aussie one that I missed, so let me just do that one for you. GTK. What a wonderful chart this is, Manpreet. It is a picture of demand. If I had this stock, I would hang on to it. If I didn't have this stock, I don't think I'm buying today, and only because of that upper shadow. I like full white candles closing on the high, but it is wonderful. If you didn't have it and you wanted to add some today, I wouldn't object to that, but that looks very, very strong. Let us go through here. Amazon, good, I found some more from Peter. AMZN, that's not where we want to be. Sorry, you're all telling me to change the screen. That is the Gentrack. I think it's very self-explanatory now, the words I just gave you on that one. Let's go here, and we're going to go back to AMZN. I'm still in the wrong place. So let's go here, AMZN, Amazon, the gap and the white candle. This is probably one of those few times where we're not that far away from the green zone, but if we are a long way from the green zone with a big gap, I'm still happy to buy it with like a plus 1/3 position, and I think that's what Amazon means to me. This is such a vote of confidence here, so more than happy to add a 1/3 to that one. Let us go to. Would not be thinking of selling a share on it. SNOW, Snowflake. That's a very, very strong candle as well. Looks a little bit like the one we saw before, BRZE, if I'm not mistaken. And we said, hey, next big white candle that comes in close to the point of supply, we'd be interested. And that would have been what I would have said to you if I looked at it based upon this candle. Oh, look, next big white candle close to the point of supply, I'll be interested. And that's what we've got. It's gone past the point of supply, hasn't it? But I don't think it's gone so far that that's a bad thing. If anything, it's just a wonderful vote of confidence. And looking up here, there is a little bit of a point here, isn't it? Much like the other one. But this candle pattern is so much clearer and so much more demonstrative. Is that even a word? Demonstrating demand there. I know it's a word. Did I use it in the right context? So that is fine. Happy 1/3 on that one. And let's go to. I need the codes. I know Boeing is B. Is it BE? What's Boeing? I forget. B. Oh, what's the code for Boeing? I should know that one. David, you put some stuff in there. I just need the codes. It's all DNN, and that's not it. DNN, which is Denison, if I'm not mistaken. Denison Mines. Happy holder on that one. I don't even mind adding a 1/3 to it. Even on that last candle, the rest of the chart is so amazingly good. Let us go to. God, I keep losing my place. That's all of yours done there, Peter. KNF. I know we're starting to push over on time here, so let me just go. Amazing, plus 1/3. I love that chart. We've done IR. Let's go to HIG. Probably not on that one. We talked about the gap on Amazon. We talked about how it was almost a full white candle there and a high close. This one is not showing that. Is there enough in there to manage my risk? Potentially, Jason has this one. Look, I don't think so. I still think blending the last two candles together, taking into account the gap, it's fine. But there is an upper shadow there. It is indicative. That's the word I should have used before. Indicative of some excess supply creeping in around that level. But otherwise, happy hold. I don't think you need to do much with that one. CDW is coming also, and that is more of a just breaking out sort of thing. And again, you'd have to sort of place these side by side. It's hard for me to do that now because I have to remember all the codes that I've looked at, and I can't. But if you had them in a watch list, you would just sort of scroll through them in the watch list and just looking for little nuances to pick whether you're going to pick this one over any of the other ones. I'm not so sure that's the case, but in its own right, that is a very strong setup and no complaints about plus 1/3 on that one. Let us stop typing in new ones, by the way, just so we can have an endpoint. VST. Let's do that one. Amazing. I think the second from last candle was the signal, and then entering at the open of the last candle is where you're in. If you don't have it, it is starting to move a little bit of a ways away from the light green zone, but otherwise it's still a picture of excess demand. And we're seeing just some amazing charts in the US, aren't we? And if you're only trading Aussie shares, it's probably a pretty good advertisement for maybe looking outside the square a little bit. And this one looks like it's just accelerating. The only thing that might worry me here a little bit is the proximity to $50, and I do think that is an important round number where we could see something like this occur. You get a period of consolidation simply because the human brain cannot deal with something going straight through $50. You're going to have some people taking some profits out up there. So just think about that one. It might just, when we talked about finding just nuances between different setups that you've narrowed it down to and you watch this, that might be the thing that just kicks this one out. Okay, doesn't mean it's a bad stock, doesn't mean it won't go up, probably will still go up, but we have to have some rules to help us differentiate between the setups. And you can see in the US, you're going to have hundreds of setups to choose from. So it's almost a relief when you can kick something out and say, oh no, $50, I'll let that one go. You know, if it goes, it goes, but you know, I need to get on with the job of finding my trades for today. And ditto on that one. I think that one's fine. I would prefer a higher close, but it is a very, very strong setup, and it has the benefit of moving through $100. I think that is important also. ENSG is the Ensign Group, and a wild candle, a good candle. It could have been much better. It's not one I think I'm going to be drawn to on that candle. I think I need to see some more evidence here that the demand side is right, because there was a bit of evidence they weren't right, and then they are right, and then they're not right. So there's a little bit of indecision in the market, and that's what that candle's indicating. So we're just waiting for a few more white candles, holding in the top third, I would suggest, of this range of this candle, and then we could look for the next, getting in before the next leg up. Okay, deep breath. We are going pretty well. Turtles, string theory. You're over this. David, you're doing a lot of stuff here, David. I probably need you to pull back so I can just sort of sort out, the stuff I need to see. VST. There's a few thumbs up. Oh, that's mainly David's thumbs up coming there as well. VST. It almost feels like we've looked at this one before, and maybe we have because it looks very familiar. Maybe Jason asking that a second time. I think he may well have asked them a second time, so I'm certainly recognising the rest of those. Okay, META. Let's go here, Meta Platforms. And there's the gap. Didn't close as well as Amazon, so I'm not putting it in the same category. It's still very strong. I might wait for another full white candle before I had a go at that one, whereas Amazon, I'll be happy to go. MSFT, we're getting to all the big ones here. Still fine. This black candle shadow here, that's a little bit concerning, but coming back nicely. Look, happy holder there. If I didn't have it, I'm probably not going to gravitate towards this one as much as some of the other ones we've seen that just don't have that dirty big black candle in it. But if I had it, I would certainly continue to give it a go. Let's do this one. No, maybe I've got the wrong one there, but that's it's probably a bit confusing for me, that one, so we might leave that one. ATRA. Let's try that for an aggressive setup potentially. Maybe just that upper shadow is probably turning me off that one. Full white candle, I could go. In fact, you can see here the candle before it. That's the aggressive setup right there, isn't it? That's the one. That's the one you're looking at right there. And I reckon you're going to see a bit of volume even on that day. I know it doesn't look much because of the big volume here, but it was in its own right a decent day's worth of volume there. But not on today's candle. Let us go LVMH, and that's obviously the Louis Vuitton, the luxury brand there. Over the counter LVMH. LVMH. Okay, I'm surprised. I would have thought it actually just been trading on the regular market. It is over the counter. Not sure how easy it is then to actually get a hold of it. You might want to trade this on the exchange. I'm guessing the French exchange is probably where it trades, or maybe in Germany. I doubt it. But yeah, look, I can see it's more of a turnaround setup. Yes, for me, I think you could add some risk to this on the next nice white candle. No complaints. David telling me to breathe. I'm trying to get to the bottom of the list, David, knowing what time it is and what time it probably is over there. And I am at the bottom of the list. So I think I've got them all. If I've missed one, I apologise. I don't think we have time to do the big scan today. And it's just kind of the nature of the beast. So let's just park that idea. But, you will get my setups on a regular basis. And I think you kind of understand already how it all works anyway. Let us head back to here and just remind you that everything next time for scans, well, we have to just take a hit on it, Peter, don't we? We have to say, well, we're going to do fewer requests and we're going to do the scans tonight. And that's okay too. But I'll leave that up to you. We'll take a rough vote on it next time, but we have run out of time today. Just reminding everybody that the content of this presentation is general in nature, hasn't taken into account your personal financial circumstances and particular needs. If you're going to act on it, consider it carefully or seek financial advice on that. Markets are risky. We know that. Stocks go up, stocks go down, and they might not go up or down when you need them to. You could lose money. Ultimately, it's you, not me, who's responsible for everything you choose to do. It has been a pleasure chatting with you today. All the best for your trading and investing till we catch up again. Bye-bye for now.